Today on the Blockchain Report, Bitcoin is sitting around 102K, probably because the US lit up Iran's nuclear sites, Texas is stacking sats like it's barbecue brisket, and Michael Saylor just predicted $21 million Bitcoin without even flinching. All that and more on today's show. Let's go! Good morning, my blockchain busting degenerates, halving hopers, and everyone still explaining to their accountant that staking rewards are in fact income. I'm Hank Hudson, live from the Bay Area where the sidewalk tent count rivals the VCs. Your landlord's got a Dow and your dentist just offered a discount for paying in Pepe coin. It's Monday, the halving hangover's very real, the meme coins are misbehaving, and somewhere Michael Saylor just added another 1,000 Bitcoin while brushing his teeth. Now before we get into the goods and throw our portfolio into another week of digital mayhem, smash that like button like it's a Solana validator on a bad day, and follow RoxomTV and me at Hank at RoxomTV on every platform in the world. We're talking X, YouTube, Rumble, and Instagram, and even Blue Sky, because people, believe it or not, use that too, I guess. Now, whether you're streaming this from a Discord server full of synthetic girlfriends, a co-working space that's 80% whiteboard and 20% LSD microdoses, or your ex's couch while claiming, babe, I'm really early to Bitcoin, grab that overpriced coffee, secure your cold wallet, and let's decode what the hell just happened over the weekend. But first, let's hit the charts in this morning's Market Rundown. Let's go. Okay, it's Monday and the markets are looking, better than I thought. So we had some trouble this weekend. There was those strikes in Iran that sent Bitcoin plummeting beneath six figures, but we're back. And right now, Bitcoin is sitting at just beneath 102K. We've seen a nice rebound in the last 24 hours. Things are looking better. Ethereum really took a beating when we had that drawback this weekend. It's currently sitting below 2,300 a piece. XRP not doing so hot either, just barely above $2 a coin. Cardono's up about 1.5% this morning, right around 54, 55 cents. And Dogecoin also feeling the heat, all the way down to 15 cents this morning. Let's see if TradFi is looking a little better in the wake of this missile strike news. And it's looking a lot the same. Not a lot to talk about right now. Dow Jones is up about 100 points this morning. Nasdaq is also up about 100, sitting around that 19,550 mark. S&P 500 up a little itself, right beneath 6,000 this morning. Not a ton of action going on. MicroStrategy not doing great this morning, down 1.5%, but I don't think Michael Saylor is particularly worried. Tesla is up big this morning, almost 10%, about $32 a share, looking nice. Somewhere Elon is doing his happy dance. Coinbase is down about 0.5 percentage point. Nvidia sitting at right around 144 a share. And Gamestop still feeling the heat after that bad earnings report about a week ago, sitting at around $23 a piece. So we're going to take a quick break, but when we're back, this morning's bull run with our very special guest. So stay tuned. We'll be right back.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back to this morning's bull run, and it's a special one because we've got a special guest joining us for this morning's run, and he's on a mission to make Bitcoin education smarter, faster, and way less cringe. He's the co-founder of Apollo, the Bitcoin education app that skips the memes, the shame, and actually helps you learn something without getting shouted at by a maxi in a Twitter thread. He also runs bitcoinlaws.io, where he's tracking Bitcoin-related legislation across the United States so you don't have to scroll through 700 pages of legalese just to find out if your governor knows what a node is. He's helping the next generation of Bitcoiners cut through the hype and get to the signal. No culty jargon, no 40-minute rants, and no laser eyes required. Please give a big blockchain report welcome to Julian Farr. Julian, welcome to the show. They love you. They're going crazy. We're so happy to have you. How are you?
I'm great. Thanks for the very warm welcome, Hank, and to the crowd as well.
Oh, they love you. I couldn't stop them if I tried.
Yeah, well, thank you, everybody. It's a pleasure to be here.
Oh, well, it's a pleasure to have you. We're excited to have you join us in the bull run today. We got a lot to talk about. Before we get started, though, we want to talk about you a little bit. Tell us, what are you about? What's your affiliation with the Bitcoin world? Apollo, what are you doing? We want to know more.
Sure, yeah. So I'm an entrepreneur. I've been a founder a couple of times of startups here in the Bay Area, and I got orange pilled, I guess, back in 2019, 2020, and then made it my mission to join Bitcoin full time and commit myself to it a few years ago. So I started a company called Apollo to do that, but more recently have been focused on a project called Bitcoin Laws, which I launched earlier this year in response really to all the amazing news coming out about strategic Bitcoin reserves popping up everywhere across the United States, or at least the legislation to create reserves being introduced. So created Bitcoin Laws to track all of this, to help people learn about it, to share the news, to share the updates, and that's what I'm focused on a lot at the moment.
Amazing. Well, we are super excited to have somebody who is at the cutting edge of the New World Order to talk with us today because we got a lot of stories. It's been a very busy weekend.
It has indeed.
Awesome. So we're going to get started with our first story, and we're going to get going in just a sec. So hang tight. All right, gang. So over the weekend, the U.S. launched 3 military strikes on Iranian nuclear sites because apparently geopolitical escalation is now a weekend hobby. President Trump called the strikes very successful. Everyone says so. And then he immediately hopped on True Social to hint at a potential regime change because when in doubt, say the quiet part out loud. Now, in response, Iran's parliament did what all parliaments do during a crisis. They held a meeting and called for the closure of the Strait of Hormuz, which, in case your high school geography teacher failed to teach you, is the single most important oil shipping route in the entire world. We're talking a full 20 to 25% of the planet's oil flows through that skinny little waterway. So yeah, the markets, they noticed, and crypto absolutely imploded during the aftermath. Bitcoin dropped below 100K for the first time in 45 days. Ethereum fell under $2,200. XRP slipped below 2. And more than $1 billion in crypto positions got liquidated, mostly longs, which means people were betting big and lost even bigger. Now, according to CoinGlass, that number probably understates the carnage because not every exchange likes to admit how many of its users got rinsed in a single night. Now, the final decision on whether to close the Strait of Hormuz lies with Iran's Supreme National Security Council. So naturally, the entire global energy market is holding its breath while a shadowy group of Iranian officials plays geopolitical Jenga. Now, traders are bracing for a spike in oil prices when markets open up today, which means inflation expectations are looking to go up, which means the Fed may delay cutting rates, which means risk assets like crypto get sent to the naughty corner. Now, again, right? So rising oil prices would drive up the cost of everything. We're talking gas to groceries because higher inflation equals tighter monetary policy, which equals sad Bitcoin chart. I hate that chart. Now, historically, when real yields rise, Bitcoin tends to dip because holding a non-yielding asset suddenly seems like a terrible idea when you can earn 5% doing absolutely nothing. The GMC 130, the index tracking the top 30 cryptos, dropped nearly 10% over the past week, and that's the best performing index. Small cap coins got bulldozed to the tail of about 17%. AI tokens lost 20%. So while Bitcoin caught a bit of a black eye, the rest of the market got dragged behind the parking lot and jumped. And as usual, everyone's looking to the Fed, the Strait of Hormuz, and oil prices to figure out what will happen next. Until then, expect more panic, more volatility, and more people pretending they totally meant to sell before the dip. So Julian, Bitcoin dropped below 100K after the US lit up some Iranian nuclear sites. Was that just geopolitics doing what it does, or does it signal a deeper fragility in Bitcoin's role as a safe haven asset? What do you think?
So I don't think there's any fragility here when it comes to Bitcoin as a safe haven asset. I think rather than looking at what happens over a 24-hour period, my first piece of advice would be to invoke what is now a bit of a cliche, but it would be to zoom out in a couple of different ways. One, if you compare Bitcoin, of course, to the rest of the crypto market, as you just so eloquently did, we can see there's a bit of a difference here. maybe a sizable one, right? Bitcoin actually held up pretty well, particularly if you take a look at, hey, this isn't the first time over the past 6 or 12 months that this kind of Iran panic has been felt by the market. And from what I can see, Bitcoin seems to be kind of holding up maybe even stronger and stronger each time. So yes, there was a bit of a price dip, but if you zoom out, of course, what you can see is strength over the long run and building strength. So nothing vulnerable there as far as I can see. And of course, as you mentioned earlier, we're already back up considerably compared to where we were 24 hours ago.
Yeah, it almost to me feels like this might have been a sign of increasing maturity for Bitcoin as an asset. Back in the day, you hear anything, whispers of potential war, Bitcoin goes plummeting, right? And right now, we dropped a couple thousand, we're already back up from 24 hours ago. Like, do you think maybe this is a further signal that we're kind of decoupling from a lot of the ways we thought about Bitcoin previously? It moved in tandem with the Nasdaq, or now it seems like it's almost a little less volatile the last couple of months.
I do. And I think one of the most important ways we can think about that and understand that is to take a look at what is the ownership distribution of Bitcoin and how is it changing over time, right? One of the biggest stories of this year has been just that. And in particular, what I think River has put out some great research to this effect. We can see that the biggest buyers of Bitcoin this year have been institutions, they've been businesses, and at the same time, the biggest sellers have been individuals, right? So whether or not we like that for various reasons, what we think about Bitcoin itself, the network, the culture, it's true. And so what does that say? It says the types of holders of Bitcoin are changing, and there's a progression in the evolution and the maturation of Bitcoin to a new asset class. And so I think every single one of these shocks now that's happening, one way to think about it could be that there is a transfer from one type of holders to the next, a passing of the baton, perhaps, from individuals who they are a little bit, they treat it more like a risk asset to institutions who increasingly don't.
Yeah. Do you feel like we're seeing with all these new Bitcoin treasury companies coming out, right? Is that something that's kind of naturally going to stabilize the Bitcoin market a little bit more? Because retail traders, they get a little flighty when Bitcoin drops a couple percentage points, but are these treasury companies here to stay? And they're like, we're in it for the long haul, regardless of these small movements of 5-10%?
Yeah. So firstly, I would say the treasury company phenomenon is perhaps the story of this cycle. That and perhaps nation state and government adoption and things we can talk about, and we probably will. But for sure, treasury companies is a big macro development, and it seems like whilst we're kind of early in that process, occurring, there is a distribution of treasury companies, right? With the 800-pound gorilla in the room, MicroStrategy up the top, and then all the way down. And we haven't even really seen this play out yet, but there's going to be an explosion, this kind of Cambrian explosion, I think, of any company that can get itself into the public markets in some way on the pretense of acquiring Bitcoin and selling shares to the public, right? So to your question of, are they going to hold? Are they going to behave differently? I think some will and some won't. I think we can probably say with some confidence, and I think the market does too, that MicroStrategy is not selling Bitcoin anytime soon.
No.
But some of these other companies, we don't know. Right? Perhaps, analogously, you might look at what the miners have done historically, right? You have big miners who can weather downturns in the market and have done so. And then you have a lot of small and medium miners who just can't. And these are different businesses that behave in different ways. But if we look to the potential long tail of leveraged Bitcoin equities companies, treasury companies entering the market, well, the financial engineering is going to be more robust at some and less at others. And some will take more risks. And some will inevitably, there's no such thing as a free lunch. There's no such thing as a risk-free trade. Some probably won't make it. Some probably will have to sell. But we're still early in figuring out who that might be.
Right, and you talked about the 800-pound gorilla in the room with strategy, right? They've been doing this for a while, so they're way ahead in their unrealized Bitcoin gains, right? But then you have these other companies that have been buying in the low 100s for their first taste of having their own Bitcoin treasury. Do you feel like there's any concern that if one of these sells in a panic moment, we could see a small domino effect? Because I don't think MicroStrategy is going to be doing it. They're so far up, but we can't say the same for a lot of these smaller companies who are just starting their own Bitcoin treasuries.
Yeah, I don't think any one company is going to be big enough and important enough, save for perhaps MicroStrategy, to scare the market.
Yeah.
Right. And I think it's always, whatever happens with any one company is, for the most part, going to be the story of that company. Of course, in a general market downturn, there will be general market reactions, but that's going to be a bigger story. So I don't think that's the case. I also think part of the, at least right now, part of the excitement and part of the optimism around some of these treasury companies is that, well, despite the fact that we talked about some of them selling, the point is that they won't have to necessarily. Like, I think that's a lot of the financial engineering approach is set up so that they won't have to, right? Keep selling shares, price goes down. Well, hey, that's just the share price going down, right? Depending on, of course, the instruments that you've used to acquire Bitcoin, as long as you're not over leveraged with debt and other things. If you're just selling equity, then you should be good. So I think the likelihood of panic being induced by some of these companies struggling, maybe some of them failing, there's good reason to think that it will be less disruptive than, let's say, an exchange going under, right? As we've seen in the past.
Yeah, definitely. And with, we're in this unique spot right now. We had some pretty interesting macro events. We're talking geopolitical conflicts on the horizon, oil supply shocks potentially, delayed Fed rates. Do you think that these things happening right now and Bitcoin staying relatively stable is a great indication of Bitcoin's long-term case as a safe haven asset, like going forward, even maybe now more than ever?
Absolutely. Yeah, I think that's a no-brainer, really, and it shouldn't even really be controversial to talk about at this point. We had Larry Fink get on TV like more than a year ago in the lead up to the spot ETFs being approved, saying just that Bitcoin is a flight to safety, right? And I think if you're getting in the game a year and a half after Larry Fink, well, you're not early anymore, right? So so Bitcoin is at the institutional level increasingly, the mainstream perspective is that this is an uncorrelated asset. You can call it a flight to safety, you can call it whatever you want, but it's an uncorrelated asset that is, I think the BlackRock itself is recommending between 1.5, 2.5% general portfolio allocation to it right now.
Right.
We're only going to keep trending further in that direction.
I think you're right. You have guys like, Larry Fink, who's leading the great evil empire. They're getting on board. You have Jamie Dimons even acquiescing with JP Morgan to, finally accept Bitcoin in their, people's portfolios. So I think you're right. It's like if those big players are finally accepting Bitcoin as this safe haven asset, I think the writing's kind of on the wall then, right?
Yeah.
Yeah, love to hear it. Okay, we're going to go to the next story. We'll be right back there in just a sec. So, gang, Texas, they've officially become the first U.S. state to commit real public money to BTC. No task force, no exploratory committee, no we'll look into it later nonsense. Just an actual law, Senate Bill 21, which was signed by Governor Greg Abbott, creating the Texas Strategic Bitcoin Reserve. And yes, it is in fact as bold as it sounds. This isn't a crypto tourism brochure or some legislative cosplay. This is a fully state-managed Bitcoin fund that operates outside the general treasury system, meaning politicians can't raid it to fix potholes or fund football stadiums. According to the law, only assets with a market cap of over $500 billion are eligible, which at this point is Bitcoin, and that's pretty much it. Now, the fund is managed by Texas Comptroller's Office and advised by a panel of 3 crypto investment professionals, which is the closest thing to actual expertise we've seen in government since the internet was invented. Now, the reserve grew through purchases, forks, airdrops, investment gains, and even public donations. because nothing says freedom like tipping the state of Texas in sats. And every 2 years, they'll release a public report, assuming no one loses the seed phrase or rage quits in Excel. Now, to make sure the whole thing doesn't get quietly folded into general revenue, Texas passed a second law, House Bill 4488, to lock the Bitcoin reserve in a legal vault. They join Arizona and New Hampshire as the only other states with a Bitcoin reserve law on the books. But unlike those states, Texas is actually putting capital behind it. No hypotheticals, no paper reserves, actual Bitcoin, actual money, and actual structure. And it's not just Texas playing this game. Nakamoto Holdings, founded by Trump's crypto advisor David Bailey, secured $51.5 million in fresh capital through a pipe deal to buy more BTC. The blockchain group in Paris picked up 182 BTC, bringing their total holdings to over 1,600 Bitcoin. So yeah, whether you live in Paris, Miami, or the land of brisket and Bitcoin mining, the sovereign sat stacking has officially begun. Okay, so Julian, Texas just put real public money into Bitcoin. You're the man that knows about this stuff as well as anybody. How big of a deal is that, both symbolically and practically?
It's huge. Yeah. Texas is, I think, the 8th largest economy in the world, right? This isn't just one. It is one state out of 50, but Texas is much more than that. It's an enormous economy,
yeah.
And even prior to the reserve bill being passed, it was, in many ways, the kind of home of Bitcoin in the United States. So it's enormously symbolic, but of course there are certain things about this law that's been passed that, as you alluded to, are very exciting insofar as the potential for direct state investment in Bitcoin, and not just state investment in Bitcoin, but state adoption of Bitcoin in a much more holistic, deeply integrated sense as well. Texas is the 3rd state to pass a law like this now. New Hampshire was the first. They passed a reserve bill which is managed somewhat differently. It's managed by the treasurer's office as opposed to the comptrollers. All of this stuff kind of gets in the weeds pretty fast. But one interesting way to distinguish New Hampshire's from Texas is New Hampshire had a 5% cap of public funds in the reserve, in the kind of general funds and others that they'd associated with the Bitcoin reserve. They basically capped it at 5%. Texas has no such cap. So Texas's reserve is uncapped. The potential for investment is uncapped, and it differs in some other important respects as well. As you mentioned, there's an advisory committee, where, well, we don't really know the details of this yet, but I would expect some prominent Bitcoiners for sure, perhaps even some prominent Texan Bitcoiners might turn up on this advisory committee to advise, to help the comptroller's office in Texas get up to speed, right? What else is there to note about this? What's interesting is this is going to be, related to the uncapped nature of this reserve. This isn't going to be the kind of thing where in advance we know how much is going to get invested. I believe so far there's been kind of an initial appropriation of $10 million with some discretion to increase that. But it's worth noting as well that the way that funds are going to come into this reserve is through the legislature itself. So legislative appropriations. So there's going to be a kind of a direct political connection to the funds that come into this reserve in a way that with, let's say, New Hampshire or other states where it's potentially more of a kind of bureaucratic, independent function of the treasurer's office or something else. So all of that is to say, we don't know yet what's going to happen, but there is an enormous amount of potential here, and it's very exciting.
Now, Texas is known as being the Lone Star State, right? They do things a little bit differently. It's kind of Texas being Texas. Do you feel like this move is just Texas being Texas, or is this a broader state level trend and Texas is just the first to actually get it done?
A little bit of both, I would say. It's Texas being Texas in the sense of it's the Lone Star State. It's a freedom-oriented state. As I mentioned, it's been a home for Bitcoin for some years now, in particular Bitcoin mining. And there's a great local grassroots ecosystem of activists and nonprofits and folks behind the scenes, Texas Blockchain Council and others, who have done a lot of the legwork over years to prepare for this moment. So that the bill really flew through the state and the House with bipartisan approval And I can tell you, as someone who watched the proceedings in Texas and comparing them to other states, there were no major hiccups. Right?
Yeah.
You watch the hearings, you don't have politicians who are asking, like, well, what even is Bitcoin? And is it going to get hacked? And these other kinds of things. None of that happened in Texas, but it is happening in other states. Mm-hmm. So Texas has been a special case in that sense, where there's a lot of knowledge with the lawmakers and in these institutions. And yeah, it's a freedom-oriented state and all of these great things. But it's not just a Texas story. Mm-hmm. We've seen this year, I think the count was maybe 46 or 47 different reserve-related bills introduced across the country in maybe 25 or 26 states. Okay. So half the country, right, has state representatives who are introducing these types of bills. Now, of course, many have failed for various reasons, which is not a surprise. Mm-hmm. This is really the first swing in a serious legislative sense of making it happen. So a lot of the other states are further behind. Mm-hmm. But it's almost now a nationwide movement to make this happen.
And you mentioned that this was a bipartisan bill, correct? What was the count? Was it like 68 yeehaws to 30 nays or something? Like, it was pretty...
Yeah. So it was a mostly bipartisan bill. So it was authored and sponsored by Charles Schwertner in the Senate and Representative Capriglione in the House, 2 Republicans. Mm-hmm. But there were a couple of Democrat sponsors that were added to the bill throughout the process as well. And then in the House... in the Senate, which was where the bill originated, I think it eventually passed 25 votes to 5, something like that. So kind of dominant. A lot of the makeup of those yes votes were both Republicans and Democrats, and same on the no side too. Just they were vastly overpowered on the yays. And a similar story in the House. I think it was 100. There were a couple of votes at the end there. It was either 105 or 120 yes, and really 10, 15 no's. Mm-hmm. And again, across the aisle, you had folks on both sides. So it was a kind of a Republican-initiated bill, but absolutely bipartisan support.
Do you think that we're seeing, as this was a bipartisan support, we're seeing more Democrats finally get on the crypto train because they're feeling like, hey, we might need to do this, especially if we want any chance in the next round of elections? Does that kind of seem to be the way things are turning right now?
Yes and no. Mm-hmm. Yes and no. At the state level, many of these bills have been more partisan, and by and large, they've been partisan in the sense that they have been supported by Republicans. Mm-hmm. It's not the case everywhere. I think some states, some northeastern states like Rhode Island, have had some Democrat originated and authored bills, but by and large, it's been a Republican story. That's at the state level. I think things at the federal level, things are changing, seem to be rapidly at the federal level. I think 6 months ago, there seemed to be a more broad-based bipartisan support. There's been a lot of work done across the aisle, so to speak, between Republicans and Democrats to progress things like the Genius Act for stablecoin regulation, and the Market Structure Bill, the Clarity Act as well. This has been an enormous bipartisan effort. Having said that, since Trump's inauguration, and in particular, some of the shenanigans that the Trump family and Trump organization were, quite openly engaging with in the immediately preceding the inauguration, namely Trump coin, that I think unfortunately, if you take the now Democrat lawmakers at their word, that has been a massive point of contention. Sure. And if you watch the hearings that have recently happened for the Genius Act, you'll see many Democrats are now hammering this point really hard. What's going on with this, in their words, corruption on the part of Trump and his family. Mm-hmm. And they've been trying to jam in clauses into completely unrelated bills, like on stablecoins,
right,
explicitly to the effect of, well, we need to stop Trump and his family from benefiting from this in any way. It doesn't even necessarily make sense, but it's now become, to answer the question, more partisan, right? And we're now seeing this kind of bickering over personal and kind of headline-grabbing things, like Trump, entering the conversation in a way that just wasn't there a few months ago. All of that is to say, hopefully we don't continue to trend in that direction at the federal level, but if we do, we might see partisan tensions rising again.
Yeah, it kind of feels like this has been a like Trump's presidency in terms of how it's helped crypto or hurt it so far. It's kind of been a 2 steps forward, 1 step back type situation. Like we have all these new regulations passing that are going through at lightning speed, but then we have Trump coin, and that's obviously, like you said, causing a lot of contention with the Democrats. Do you feel like this has been a net positive though so far in our first like 5.5, 6 months for Bitcoin as far as Trump's presidency goes?
I do, absolutely. I think it probably hasn't matched everybody's expectations. I think many people watching would agree with that. There was a bit of euphoria pre-election, particularly and immediately post-election, once it was clear that there would be a Trump administration. I think people thought it was going to be up only, indefinitely, green light for everything, and off to the races, right? Mm-hmm. And that hasn't really happened for various reasons. We had the tariff thing. We've had geopolitical concerns. We've had, frankly, maybe even a little bit of some unfulfilled promises so far. We were expecting, I should say, an audit of the federal government's Bitcoin reserves, which is still forthcoming. If anybody's watching the White House or in government, hey, we're actually still waiting on that. So we'd love to know how much Bitcoin the government actually has. Mm-hmm. Apparently that's gone down some deeply classified rabbit hole now. Oh. So and of course there was an announcement of a federal Bitcoin reserve.
Right.
In theory, the enactment of one with Trump's executive order, but not a lot of movement there. So all of that is to say, I think expectations were really high, and it's probably fair to say they haven't quite been met yet. However, I think the most important thing to consider when answering this question is, what was the alternative?
Right.
What would we have seen had Trump not won that election? We would have seen a continuation of the Warren, Gensler, and co regime of, in my view, arbitrary, capricious persecution of the crypto industry. Mm-hmm. And I think, the TLDR is, I think prices would be a lot lower than they are right now.
Yeah, I think it was a lot of legislation stifling innovation, and now it seems like the floodgates have been opened, and maybe there's going to be some hiccups along the way, but at least we're progressing forward at some noticeable pace, or so it would seem so far. So I'd have to agree with you on that. The law that was passed states that the assets that are allowed have to be over 500 million in total market cap. Is that just kind of an indictment on the rest of the industry outside of Bitcoin right now? Because they're the only one that fits that bill currently.
Yeah. So 500 billion over 2 years.
Over 2 years, okay.
So you have to not only achieve that $500 billion market cap threshold, but you have to hold it for 2 years, which again is an even higher threshold to meet, right? Mm-hmm. So far, Bitcoin is the only digital asset to even crack that threshold at all. So for all intents and purposes, SB 21 in Texas is a Bitcoin-only bill. Mm-hmm. In some ways, it's also called a Bitcoin, like it's called a strategic Bitcoin reserve bill. But of course, if some other digital asset was to crush that threshold and hold it, it could be included as well. Is it an indictment? I don't think it's an indictment. I think what it shows is political necessities and political realities. Okay. Many of the lawmakers who have introduced these bills around the nation, and I can say because I've watched a lot of the proceedings when they have done this, they have to explain what they're up to. Yeah. And of course, particularly in some of the states, not Texas, but other states where lawmakers are a lot more skeptical, the first thing they ask is, well, does this mean we're going to be, the state of New Hampshire or Ohio or anywhere? Are we going to be investing in Trump coin now? Are we going to be investing in Dogecoin and these other things, right? Right. It's a fair question. Yeah. Right? This is public money. And so these types of clauses have been introduced to stave off some of those valid concerns and really give the perception and the effect of this being, conservative, sound, financial decision making. Mm-hmm. So I think it's really just that. The one thing I would say is the jury's still out on precisely what the effect of these, minimum market cap threshold clauses are. in general. The reason I say that is because, I've seen a couple of quirky examples where it's actually had the reverse intended effect.
Oh.
So where lawmakers have actually, looked at this and they've said, well, they've seen through, right? They've read between the lines. And so they've said, okay, $500 billion, some of them $750 billion market cap threshold. Well, we know that there's only one digital asset that meets that threshold. Right. So are we picking winners here? Oh. Because governments don't generally like to be in the business of picking winners. Right. So, that's a little bit of a nuance to add to the discussion. But, it's not entirely clear what people think when they first see these things.
Because when they first came out with the strategic reserve, wasn't XRP and Ethereum also included in that initially?
The federal? Well, yeah. Actually, this is a good point. So, and there are layers to this story, but Trump, if I'm not mistaken, made an initial announcement before the strategic Bitcoin reserve, announcing a federal crypto stockpile.
That was it.
I think this was the first announcement, and he even explicitly said, in this stockpile, there's going to be XRP and some other things
maybe
too. Maybe Solana,
Yeah.
and then in quite a Trumpian fashion, followed up shortly thereafter and saying, oh, by the way, just so everybody's clear, we're also doing a strategic Bitcoin reserve, and that's very different to the crypto stockpile. So that, I think, is a story of maybe some improvisation, some building on the fly that's happening in the Trump administration.
He is great at that.
Yeah, that's a kind of a hallmark of how things work in the White House, I think.
Yeah, because I'm surprised I haven't heard any of the state legislatures talk about that. It's been strictly Bitcoin the whole time, and we initially had the Fed come out and say that there were other options, not just Bitcoin. So it's kind of surprising to me that we haven't heard even a murmur of that, I feel like. Maybe we have we?
I haven't seen a single murmur of any suggestion that other things should be added into these reserves. Aside from New Hampshire, which technically speaking, it's not crypto, but theirs is a digital assets and precious metals reserve, if you want to get pedantic about it. But no, nothing about other crypto assets. But I think the main reason there is just natural conservatism and trying to gently introduce these concepts to politicians and lawmakers who are frankly fairly unfamiliar, to put it charitably, with the technology and everything else. So it's kind of the most conservative way to kind of open the door is to talk about Bitcoin, which pretty much everybody knows and has heard of, and doesn't have quite the same reflexive suspicions about some of these other more untested assets that are more volatile as well.
Right, and definitely don't have the 15, 16-year track record of Bitcoin, right? So that's a little bit easier to wrap your head around, especially if you're not super knowledgeable. And that's kind of part of what you do, right? Is like educating people, especially we need to be educating people in the government of like the benefits of this. So I'd be kind of curious, you have that great website, bitcoinlaws.io, right?
That's right.
What other ways do you go about it, I think through Apollo, to educate people on Bitcoin and why they need to be paying attention?
Yeah, so Apollo we built as a place to learn about Bitcoin products and services, for people to compare them, exchanges, wallets, financial services, other things, put them side by side, compare them, review them, and learn about what to answer this question. Well, what can I trust? What should I use and why? Bitcoin Laws, perhaps has a similar mission, but it's to educate people on what is happening at the level of policy and politics with Bitcoin and digital assets. I think a lot of people, in crypto, in Bitcoin, have historically been averse to this idea of there being, an integration with the existing financial and political systems, right? Bitcoin isn't Bitcoin antithetical to that?
Yeah.
Should we not seek to build parallel systems and so on and so forth? My view is we have to be realistic about not only what's going to happen, but also, frankly, what's good for Bitcoin and crypto, and that is acceptance by the financial system, by the legal system, and I would say, there's the old adage of, well, you might not be interested in politics, but politics is interested in you. And so if you're a holder of Bitcoin or an investor in anything else, you might not care about the political system, you might not want to participate in it at all, but they want to know what you're doing.
Yeah.
And they're going to pass laws about it. They're going to pass laws about how to trade, how to hold, how to custody, unclaimed property, estate law, taxes. There are if you look at my website, bitcoinlaws.io, you can see there are probably 15 different just little areas of law that touch on this, touch on digital assets in some way. But I would say that's what it looks like. That's what progress looks like. That's what it looks like to be. That's what maybe hyper Bitcoinization looks like. It's to become deeply integrated in the systems of law and politics and finance and everything else as well.
If you take a look right there, we got your map up. So right now, what we're looking at here, these are the oranges are all states that have started the process. Is that accurate?
So this is the most zoomed out, holistic view of legislation being introduced around the country. These are all states that have introduced some kind of legislation related to Bitcoin and digital assets.
Yeah.
So a subset of those then have introduced reserve bills.
Okay.
But yeah, as you can see, and I should say, this is just for this year's session.
Oh, wow.
As well.
Okay.
So some digital asset bills have been moved and passed in prior years. This is just this year, and as you can see now, a quick count. Some of the states are smaller, but it's like the majority.
Yeah.
Probably 40 plus that have introduced some kind of legislation. I should say most of it has been overwhelmingly positive, but not all of it.
Yeah.
But that's another reason why I feel like it's important for people to learn about what's going on here.
Yeah.
For example, Nebraska introduced, and I believe actually passed until it was vetoed by the governor, a law imposing excise taxes on miners. Right? We're going to slap it. We're going to slap an extra tax on miners, which I would say is transparently not a good piece of legislation. And I think the governor saw it similarly, right? So that's why it was vetoed. So there are a couple of examples like that where this isn't just a big, beautiful orange map of wonderful things happening all the time.
Yeah.
But for the most part, it is.
Okay. And so these aren't all wonderful, but we have Texas just past theirs. Are there any other states on the docket right now that you feel like are heading in a similar trajectory, or is Texas way ahead of the pack right now?
Texas is number one, but there are some other states that have made great progress, whether it's going to be this year or next, and I would say are kind of nipping at the heels.
Yeah.
Arizona is one with a big caveat. So Arizona actually passed 2 different Bitcoin reserve bills this session. Unfortunately, both of those were vetoed and shot down by the governor, Katie Hobbs. This is after passing both the House and Senate. And Arizona, even aside from those Bitcoin bills, passed a raft of other bills. We can see it on the screen now. Lots of different bills introduced in Arizona related to Bitcoin and digital assets. So Arizona, as a state, is Bitcoin forward.
Right.
But it is we live in a system of checks and balances, and the governor and the legislature and how they operate together and the political realities is a big part of actually getting across the finish line.
Yeah.
So we haven't seen that yet in Arizona, but they're right up there. Florida, similarly, is another Bitcoin forward state. They also introduced 2 Bitcoin reserve bills this session. Unfortunately, with Florida, they just couldn't get passed in time. The legislatures, this is another thing about legislatures, is that they are time bound. So the legislative session in Florida ended maybe 3 weeks ago. They had two great Bitcoin reserve bills in there, some fantastic testimony from the bill authors. You can maybe at some point I'll repost it on my timeline.
Yeah.
Looked really great in Florida, but they ran out of time. And so that's a story in some other states too. So Florida, Oklahoma, Arizona, these are all great states that made progress this session, but didn't quite get there. There are some states that are still in play, though. Ohio is one that has live reserve legislation. We're still kind of waiting to see how that's going to play out now. There are a few contenders.
Now, of these people that aren't currently contenders, obviously there are still some people that have their reservations about putting Bitcoin in state treasuries. They think maybe it's a little too volatile for a place like that. Do you feel like that's a legitimate concern, or is that just political noise?
So I would say it depends. It depends on the state. This is a diplomatic answer. It depends on the state. Look, my personal views, hey, I'm a Bitcoiner. I'm here to spread Bitcoin education and Bitcoin knowledge and to promote it. I think it's a great idea. That's me.
Yeah.
But, each of these states has not only a broad distribution of legislators and lawmakers that feel differently, they also represent actual people and actual voters that feel differently too. So I would say it's about moving the democratic process forward productively and getting the right message through, which is that this is not a speculative bet. This is I would say, necessary feature of sound prudential financial management for these state governments going forward. And I would also say this, there is objective evidence to show that is the case. Now, there's another story here that's happening behind the scenes in many of these states, which is not as headline grabbing as the reserves themselves, but is potentially much more impactful. And that is that many of these states have public retirement funds and public pension funds that are basically underwater, critically underfunded. Millions of public employees who are going to be relying on pensions being paid out over the next couple of decades. And it's not the case across every state, but for many of them, it's not clear where that money is going to come from.
Right.
So the question is, well, where is it going to come from? How are we going to make up that difference, right? Because currently these pension funds do have a mandate to invest in equities and ETFs and other things. They are active in the market. They're trying to make a return so that they can meet their obligations.
Right.
But they're not getting there.
Right.
So what are we going to do about it? I think the answer is Bitcoin.
Yeah.
Right. The other thing, but so if the answer is Bitcoin, well, how meaningful could that be? Not only for the funds who and the people's pensions who desperately rely on it, but how meaningful could it be for Bitcoin in a more general sense? Well, then the answer there is actually very meaningful.
Yeah.
Because when we talk about states and we talk about strategic Bitcoin reserves, as wonderful as they are, often we're not talking about investment amounts that are going to be market moving on a case-by-case basis. Texas might be an exception, being the 8th largest economy in the world. Many states are much smaller.
Yeah.
But if you look at the size of these public pension funds, they're orders of magnitude bigger. Tens of billions of dollars under management. And these are funds that are underperforming.
Yeah.
So I would say, and I'm not the first person to realize this, many of these reserve bills have touched on this issue to try and get approval, give the green light to these pension funds to invest in Bitcoin ETFs and other things.
Right.
But I would say that's maybe the next story, is what's going to happen with these public retirement funds, because it's a lot of money and there's a huge need.
Yeah. And I guess I want to scroll out here big picture. Texas just made this big move. What do you feel like this signals to institutions, lawmakers, and like the next wave of Bitcoin curious states going forward? Is this just full send ahead, or I don't know. What do you think?
I think it's an incremental process, right? It's an incremental process of convincing, at the end of the day, we're talking about individual people whose minds need to be changed.
Right.
It's easy to forget that sometimes when you zoom out and you talk about macro developments or quote unquote the market. What is the market going to do? Really, the market is made up of individual people.
Right.
Some of these individual people, like Larry Fink and others, who are responsible for making very important decisions about the trajectory of enormous asset managers in this country, at least. They can be orange-pilled.
Yeah.
Just the same way that Michael Saylor was and that Larry Fink was, right? So they also have questions. They have reservations and they have their own doubts. So every single time the state like Texas passes a Bitcoin reserve bill or any other bill, whether it's related to commercial codes or money transmitter laws or the Genius Act passing or anything, every single time this happens, it's further evidence that not only is there there's a sensible long-term foundation of stability and security for all of this stuff.
Right.
Well, relatedly, it's not going away.
Right.
And if it's not going away, well, then you have to say, okay, this is, to quote Michael Saylor, well, if it's not going to zero, it's going to 1 million.
Right.
And increasingly, we can say with certainty, it's not going to zero. So then what do you do?
Right. Well, Julian, I got to tell you, it has been such a treat having you here to break all this down. There is no one better, maybe in the entire cryptoverse, to come here today and kind of lay the land for us here at the Blockchain Report. So we really appreciate having you on today. If people want to learn more about you and Bitcoin laws and Apollo, where can we send our audience to check it out?
Well, thanks, Hank. It's been great to be here. I would say you can find me on X. My personal handle is Julian_Fahrer, Fahrer. I'd also recommend following Bitcoin Laws, also on X, Bitcoin_laws. I'm posting news there, posting updates on all of these legislative processes and all of the bills that are being passed. So that's the best way. Follow me, shoot me a DM if you have any questions, and I'd love to chat about it.
Julian, it was great having you on. We appreciate everything you're doing for the industry and educating all of us out there so we're all a little smarter and can snack a little harder. So
thank you very much.
We appreciate it. Yeah, thank you. The pleasure is all mine. All right, welcome back to this morning's Bull Run. We got another treat for you, as today we've got our second special guest joining us on this morning's Bull Run. This is a man who went from chasing pucks as a collegiate hockey star to chasing sovereignty, sound money, and generational wealth. He's the founder of Mitten Made Properties, the host of a podcast spotlighting top voices in Bitcoin, freedom, and finance, and he's built a fast-growing content platform focused on educating people about money, independence, and how to play the long game, baby. Please give a big Blockchain Report welcome to Brandon Gentile, everybody. Welcome to the show, Brandon. It's so good to have you. Our audience is thrilled you're here. How are you this morning?
I'm awesome. Thanks so much, guys. Thank everybody for having me. I'm looking forward to being part of the show and everything you guys are doing. So let's rock and roll.
Oh, the pleasure is all ours. We're so excited to have you here. Now, Brandon, you've got a really interesting backstory. So from collegiate hockey star to real estate investor to now teaching the world about Bitcoin and sovereign money. Tell us a little bit about your background. How did you get here today?
Boy, yeah, long story. I was I'm 30 years old. I was very politically active as a child, believe it or not. Just middle school, high school, arguing with teachers, arguing with friends, family, whoever I could, whoever would take time to give their opinion, we would have it out. So I did that really all through the 2000s, and then saw the '08 crisis happen and realized, wow, these guys are all on the same team, and it's not the red versus blue, it's the state versus you, and it's the collectivism versus individualism, and that's what really set me down the road of finding, as I'm playing hockey at Michigan State, and then I'm entering the minor leagues and playing professionally, and in '08, '09 is right when that was happening, and I started down the road of finding every book I could on monetary history. And I was in the grocery store one day and just happened to stumble upon one of Donald Trump's books, ironically, Why We Want You to Be Rich, with Robert Kiyosaki. And I had no idea who Robert Kiyosaki was. I knew who Donald Trump was. I'd studied law, real estate in college, economics. So it piqued my interest and just kind of blew my mind open. And it was all, your money, should work for you, passive income, leveraging your assets, buying assets, getting out of the dollar. The money's broken, and that led me to Creature from Jekyll Island, finding Mike Maloney, goldandsilver.com, and all these people that were teaching monetary, the Jim Rogers of the world, Jim Rickards, and Harry Dent, and on and on and on, and Peter Schiff, ironically, and Max Kaiser. So that was my 08, 9, 10, 11 journey as I'm playing in the minors, and there's a lot of downtime in hockey and professional sports, and really the entertainment business. That's what sports is. The Hollywood world, the sports world, there's a lot of downtime. And so I was trying to spend my time as an early 20s studying, and it was this transition from the political world and seeing that was not the answer to then this money world. And then you quickly start reading all this literature and you realize, wow, this is how they're controlling all of us. These puppet strings are what's controlling people and the incentives and the decisions they're making. So that led me to creating, after a couple of years of playing the minors, getting my head knocked around a little bit, getting in a lot of fights, blocking shots with my face. I got scars, my teeth knocked in, got scars on my face from, taking pucks in the face, taking punches. And you start, you're thinking about things and, what do I really want to do with my life? And you realize that this boyhood dream, this game that you're playing, it's just a game at the end of the day. And I was thinking about a family. I'm 23, 24, 25 years old. And what am I going to do with my life? So I ended up hanging him up in my prime as I climbed the ranks from single A, double A to triple A. and hung them up in my prime because I didn't want to be a vegetable when I was 40 years old. I wanted to be able to have kids and do the things that I'm doing now. I didn't know what it meant at that time, but I knew and thought and prayed about it for a year. And what am I going to do? So I left and retired and started a real estate team and did that for 10 years. And on that journey, as I'm doing social media and trying to expand my fiat business in real estate, I was taking all my knowledge there and understanding money. And I started on this Bitcoin thing. I'd hear about it in 2014, 2015, 2016. And it wasn't until 2017, that bull run, where I was like, wow, I really have to dive into this more, and started in on that asset. And then over the next couple of years, as I really dove into it and took all my monetary knowledge and history and the political knowledge, it just became very evident that this was going to be the only way, us, at least as humans, without some godly intervention, we were going to be able to kind of correct the ills of the system we are in. And so I was trying to figure out, how am I going to get rid of my real estate team? How am I going to fire myself from my own business, my own job? And then it took me a few years, it took me a handful of years. And 2020 came around and it kind of sped up then, obviously. And over the next year, I fired myself, the handful of employees I had, the agents, and wonderful, wonderful people, great people. And it was really just firing myself. I knew I was being called in a different direction. I need to be in a different space. And so the early 2020s, it was starting up my blog that I'd started a long time ago, restarting that, starting to do YouTube, putting out content about all the things that I learned for 15 or 20 years. And how I didn't know what it meant, what I was going to do in this space. But over the last couple of years, we built up the YouTube, interviewing people in this space, obviously, as the likes of all of you, and trying to spread that knowledge that I had learned for 20 years. So giving back to the people, and me learning on YouTube a lot over the years. How can I give back to the community in what way, and what made sense with my life? So here we are, a couple years in, and the podcast is really growing, and we're getting a lot of obviously great feedback and people learning things, which is my ultimate mission. I think I'm a teacher at heart. At least my mom has always said I was, and I always said, I'm never going to be a teacher, Mom. Like, that's ridiculous. That system's broken. But here we are. So Mom was right at the end of the day, and that leads us to a very quick synopsis of the last 20 years.
No, we appreciate that. We certainly appreciate that you decided to hang them up in your prime, avoid the CTE, and educated yourself with all that downtime, because you are really one of the up and coming Bitcoin crypto educators in the space right now. And we're so happy to have you today to talk about some of these stories. So I'm going to ask you, just stay put for just a second. We're going to bring you back because we got some fun stuff to talk about. Sound good?
Good.
All right, so returning to this morning's bull run, over the weekend, in case you were sleeping, the U.S. launched military strikes on Iranian nuclear sites, sparking major geopolitical tensions. Iran responded by threatening to close the Strait of Hormuz and the world's most important oil shipping route. Markets absolutely freaked out, oil fears surged, and Bitcoin, well, it crashed below 100K for the first time in over a month, and over $1 billion in crypto longs got liquidated, and the whole market took a beating. Now, with inflation concerns rising and the Fed likely to delay rate cuts, risk assets, especially Bitcoin, are back in the crosshairs. So, Brandon, I got to ask, I want your opinion on this. When geopolitical tensions like this erupt, why do you think Bitcoin tends to react more like a risk asset than a safe haven?
The answers to that really are, obviously, it's 24/7 market, and it's the most liquid asset that people have to get rid of, and to try to capture some fiat again, and get rid of other positions they have and that maybe they're underwater on, or whatever it might be. So that's one of the big things. But the other thing is education. I mean, at the end of the day, this is, any of us that are in the Bitcoin world, we know that Bitcoin is a risk off asset. That's what it is. It's just money. And so we're very early on the education curve, and it's deceiving, because you go to these conferences. We all saw each other in Vegas just a few weeks ago. I know there's a lot of people in Prague right now, and you get in this bubble, in this echo chamber, and you think, hey, everyone knows what's going on. And then you get home, and I mean, we all know what happens when you get home. It's completely opposite, 180 degrees different from what we just experienced when you're at a conference all week long. So The education is so early, and I think that's really, honestly, the biggest driver. And the secondary one is just easy, quick liquidation.
Yeah, that makes a lot of sense. We always forget that the TradFi markets are closed during the weekend, and we need to see some kind of reaction to these macro events, and crypto is right there for the taking. So I guess we shouldn't be that surprised we did see that slight pullback. But then, as we noticed this morning, we've jumped back up around that 102 level. Do you feel like that quick turnaround is kind of a signal of the increasing maturation of Bitcoin as an asset? It used to seem like it was a lot more volatile than we've been seeing with these macro events in the last few months.
Oh, absolutely. It's definitely maturing as an asset. Clearly, I mean, you always kind of laugh when you hear objections. People are like, "Well, can I buy anything with the grocery store with it yet?" And like, obviously, we all know, yeah, there are many ways to do that. Whether there's a payment terminal there or not, but this is an asset that didn't have a price. What, 14 years ago or 15 years ago, it didn't have a price, and then it was 1 cent, and then it was 10 cents, and it was a dollar. And now it's $100,000. So anyone who's not, it takes 2 seconds to do a little homework and see, well, there's something here, and there's obviously a maturation in this process. But I think it goes to, because we're so early, like we just talked about, there was such massive upside still, and people think that, oh, it's already at 100,000, so I got to go find something else. I got to jump back into real estate. I'm trying to go down out the risk curve and try to find other things, when in reality, there's still 100x, 1000x, 10,000x over the coming decades to go in Bitcoin.
Yeah, everyone's always chasing those high alpha plays, but you believe right now, I mean, there's a lot of people that would probably agree. Michael Saylor recently came out and said he thinks it could go to 21 million, which at today's prices is a number bigger than I think I can count, frankly. But I think there is a lot more upside left in the market than people realize. But do you think people are getting spooked? They see 6 digits, they're like, how much further could it really go?
Yeah, 100%. I'm trying to think of the other, maybe Berkshire Class A shares. I'm trying to think of what other things out there that, and maybe housing, you could say, like, what are the other assets that have like that nominal price tag on them? So it scares people away because of that. And especially when you have like the median salary in America is, I don't know what it is exactly, 60, 75,000, somewhere in there. When you have an asset, a single home or a single a Bitcoin is more than that. So the average person, again, when education is low, you have this feeling of, I can't obtain it, so I need to go find something. It's just that unit count bias. So I think that is something that people are going to have to continually get over as education, but it's going to take a little while. It really is gradually and suddenly, and things are going to spark that. There's going to be black swan events, good and bad, that happen. Like we just touched on the war, things that are going on. People, the more those things happen, the more education speeds up, whether it's truckers, the Dutch farmers, like all these things that are happening are what's going to increase adoption, because the education increases very quickly in those step change events that happen.
Mm-hmm. And he talked about like a black swan event. I'm not sure if we would necessarily clarify this most recent strike, but it looks like we could be entering that territory. Nonetheless, over $1 billion in longs were liquidated during the drop this weekend. Do you feel like that says more about poor risk management or just the reality of leverage in crypto right now?
Yeah, I think it's leverage for the most part. People are trying to find, like you said earlier, like the alpha. Obviously, you see a lot of Bitcoin treasury companies coming out, and that seems like that's going to be a lot of the altcoin season to a degree, is people jumping into a more, I guess you'd say more of like a legacy play to a degree. A lot of these companies are publicly traded, or they're about to be, or whatever it might be. So you kind of have like this marrying of these two worlds together, where people kind of degen into companies that are stacking Bitcoin, or they're trying to accumulate more Bitcoin. So I think that's definitely part of it. And I think the other thing, going back to the Saylor thing, again, that's important too, because it's the Overton window. Like, we need to shift the Overton window, and this goes along with the adoption and the education. And Saylor continually shifting the Overton window is important. It's important for all of us to shift the Overton window. And it's the old Steve Jobs quote of the crazy ones, and I don't know the entire quote, but the people that think they can are the people that end up doing it. And you got a lot of people, and Bitcoiners tend to be very idealistic people. Many of them are entrepreneurs, or they used to be entrepreneurs, or whatever it is. And like many of us. And so you're trying to paint a vision for the world that this is where we're going. This is what it's going to be. And it might not be there yet. And I think that's why there's so much cognitive dissonance. There's so many people have a hard time seeing that. You get a lot of the same old objections over and over, because the education is lower, because a lot of people don't live in that world. They don't live in this world where there's a lot of hope, quite frankly. You get beaten down just mentally, and your willpower goes away, because you're beaten down by being on the inflationary hamster wheel, or you're beaten down by endless news headlines, and some of the stuff you just mentioned. Like, we all see that now, where for thousands of years, we didn't know what was going on around the world. So now you have unit count bias, you have these black swan events, you've got headlines 24/7 of just negativity, which is generally what a lot of news is. That's why it's great what you guys are doing here, because there's hope to it. There's hope to what Roxom is doing, and RoxomTV, and the Bitcoin educator, because there's actual answers that need to be talked about. Otherwise, what's the Bible verse of if my people don't have hope,
The appeal, which makes sense to why there's such a passionate fan base, as you and I both experienced when we were back in Vegas, but we're not exactly feeling that for the nation as a whole or the world as a whole just yet. But I think we're getting there. And thanks to guys like you who are helping educate the masses, because we've seen time and again, whether it's Michael Saylor or who wasn't a Bitcoin guy at first, and you even have people like Jamie Dimon now beginning to acquiesce and say, okay, I think I don't love it, but we'll accept it for our clients now at JP Morgan. Once people get educated, they start to get wise, and I think that's all about orange pilling, right? Back to this most recent story, though. How do events like these strikes that we experienced over the weekend shape the narrative that Bitcoin is digital gold or a hedge against traditional instability?
I mean, one of the easy ways, I think back to the Ukraine, when that happened a couple of years ago. So when these events are happening and bombs are falling and rockets are coming in, you see these stories inevitably of people taking their wealth in their head and leaving the country. They're walking somewhere else, literally and figuratively. They're going, voting with their feet in essence. They're trying to save their own life. That is one of the things that orange pilled me big time. 5, 6, 7 years ago, 8 years ago was seeing that you could hold your wealth in your head and you weren't tied. You start thinking about real estate, the world I came from, or many people that might own houses, and you realize the city's hitting you with fines or you're paying property taxes. You don't own those assets. You're renting them from the state. And that's where this asset you are completely sovereign. So that's going to be one of the big ways that people are going to see, hey, there's a way out of here. But again, there's just the simple advantage that Bitcoin has is it's not, people think it's an objection of like, oh, there's not cash flow. How do I invest in Bitcoin? Or why would I hold Bitcoin? I can't use it. It's not money yet. Or it's not a currency yet. We're not using it medium exchange. But one of the big things is it's not tied to these market events. Actually, like we talked about earlier, the price only goes down really right now because there's a lack of education and it's very easy to liquidate. So people are trying to shore up their other assets that are tied physically to the market. So for me, it's just a time thing, and you look back to the last 16 years and that's all it's been. And it took gold hundreds and hundreds of years for society because you couldn't communicate, like we said as well, around the world. You couldn't communicate easily and quickly. Now it's only been 16 years and it's already a $2 trillion asset class and steadily climbing really quickly. Like we said, it was a cent, didn't have a price, it was a cent, and now it's 100,000 US dollars. And going back to shifting this Overton window as well, fiat has no bottom, I guess the bottom is zero. So fiat, Bitcoin has no top, and it's going to infinity. And that's all currencies have gone to zero over the course of human history. Every single political fiat government currency has gone to zero. And so that's something that the average person has to understand. And the dollar has lost 99% of its purchasing power over the last 112 years since the Federal Reserve was created. So where do we think this is going? Do we think that trend's going to reverse? In investing, there's this big saying of the trend is your friend. So where do we think? I mean, Trump was the one coming in saying, hey, we're gonna cut things and this and that. Like, look, they're trying to cut fraud and waste. And there was, just all hell broke loose. You couldn't even cut fraud and waste. You think people are going to actually be able to cut actual things? No, of course not. And Trump was the most anti-war guy I've ever seen in my life, quite honestly. For 40 years, 50 years, the guy said the same thing. And here we are. So again, if you don't know the game that's being played behind the scenes and how money controls things, follow the money, as Nolan Bowerly always talks about, right? There's the analysis is not, follow the science, it's follow the money. How are we following the money? That's going to get you much closer to the truth. So these strikes, what's happening, I think this is going to just continue waking people up as people see people moving across the borders with their wealth in their head. They're not battened down. They're not stuck in a place anymore. And it's just purely, I think, an education play, because most people, when you go around, you talk, like I said, in Vegas, and you just said too, you're in an echo chamber. When you go out, most people have no idea. A lot of people don't even know what Bitcoin is still. They think there's a CEO to Bitcoin. I've talked to many people and they're like, who's the CEO of Bitcoin? We are that early. And it seems like we're not early, but we are truly that early. So it's just time and education. But at the end of the day, it's only been 16 years to gold, hundreds and hundreds of years. We're moving much, much quicker. So it's, take a deep breath. We're getting there. You hope bad things don't have to happen. You hope black swans and these crazy things don't have to happen, but they're going to. We're humans, and that will keep speeding up adoption and bringing people towards our side.
Yeah, and you talk about speeding up adoption. I know something that a lot of people have been waiting and hoping for, and I know Trump has been calling for it, is for some rate cuts. The Fed has delayed rate cuts in response to likely oil prices rising as a result of this whole shenanigans in Iran this past weekend. How might the fact that we might be delaying Fed rate cuts even further impact Bitcoin's short-term, mid-term momentum? Because we know if the Fed starts lowering rates, risk-on assets become a more popular place to put your money. But right now, it seems like that's not what's going to happen. How do you think that's going to impact Bitcoin in the short and mid-term as far as its momentum right now?
You know, it's funny you say that, because I feel like a lot of people, if you ask them, and like the rate, I thought there'd be rate cuts way sooner. And I've talked to many people, even in Vegas.
Yeah.
I don't think you and I talked about there, but I talked to a number of people there that, they thought, we'd last maybe, because what was it, end of 2022 or end of 23? Trying to think of when they really, they basically cinched everything down. They raised rates, and a lot of things just kind of stopped. And then you hit the blank. Yeah, it must have been end of 2022. And then early 2023, you had Silicon Valley Bank blow up and a bunch of different things. Now, again, we can get into what might have really been happening there and what the government was doing. So that's a side story. But I thought things were going to crack much sooner. And it just kind of goes back to a lot of the guys I followed for years, like I mentioned earlier, the Harry Dents of the world, the Jim Rickers, all these guys, the Robert Kiyosakis. These guys have all thought that things would have crashed 10 years ago, literally 10 years ago. And I did too. I was in that camp. But the Fed, again, the markets can stay irrational, and there's a lot more tricks up their sleeve than a lot of people can stay solvent. So I think that at some point they're going to bring down rates, but who knows? That's wild. But in saying that, I think of a lot of people, a lot of Bitcoiners, if you said, hey, we're going to have rates that are high, I guess, quote unquote, at 5, 6, 7%, or just what they had been, that Bitcoin would not be doing very well. I think a lot of people would have said that Bitcoin would be at 5,000 or 10,000 or 20,000, because there's a lot of people that think, hey, it's just tied to M2. It's just tied to global liquidity or whatever it might be. Mm-hmm. And for all intents and purposes, it's fairly correlated to that sense, because that's what Bitcoin does. It's money. It's sucking up. It's the black hole sucking up all the liquidity in the system. But at the same time, we can see, like we've been talking about here, that it's an escape. It's truly a risk-off asset. It's climbing over time. We've had the Ukraine war. We've had the October 7th attacks in Israel. We've had what's going on now. And Bitcoin just keeps chugging along. It's just climbing the staircase. If you look at it, obviously in a log chart, it's network effects. The hash rate keeps growing. All the fundamentals of the system keep growing more and more and more. So if you're looking underneath the surface, you can see things truly going up and to the right over time. But again, it just goes back to adoption or education leading to adoption. And most people are not there, but you have a lot of, obviously, whether it's nation states starting to mine, sovereigns coming in, these people, these big liquidity pools that are starting to be tapped into. Again, we just interviewed some people, recently that'll be coming out soon, actually, like Checkmate and, Peter Dunworth and a bunch of people that, Matt Hogan, a bunch of really good people we've had on our show that are going to be coming out in the coming weeks. And Matt Hogan is talking about, again, these liquidity pools are just starting to be tapped into. We haven't even seen that yet. And we haven't even seen retail in here either. I mean, retail is out to lunch right now. So we're at the beginning. This goes back to this whole theme of how early we truly are, and the really the lack of adoption that we've had. And we're already at over, a $2 trillion market cap, and we're already over $100,000. So as Lynn Alden always says, nothing stops this train, whether it's the fiscal dominance and like the printing that's going to have to happen, in the yield curve control, the financial repression. All these things are inevitable because of the system that we are in. We're in a debt-based inflationary monetary system, period. And once you understand that, it becomes very easy to realize, again, that Bitcoin is a risk-off asset. It's the only real safe harbor. It's the lifeboat off the sinking Titanic. And yes, is it small? You're in this dark ocean, and it's volatile, and it's waves, and scary, and it's cold. Yeah, but when you come off the ship and you're on the lifeboat and you look back at the Titanic, it's very easy to see that it is sinking. But the answers, a lot of times they say, like, you only get the answers after the test is over, right? Well, you don't, until you make that jump and onto the lifeboat, until you actually say, you know what, I'm breaking away, then you get the answer to the test. Then you see, whoa, I was right. And they're trying to save people and yell at people on the Titanic, and they're still reading headlines. They're like, this is unsinkable. It's okay. Even the water, deck chairs are shuffling around and the water's starting to come on. It's starting to list. Again, people, the dollar's too big. America's too big. The military's too strong. Well, it is till it's not. And I think there's, maybe a number of years until all this really transitions, but it's a gradually and sudden moment. At some point, the iceberg flips, and are you prepared?
Yeah, it definitely feels like the lack of education on a global scale sometimes is what often is attributes to this FUD we see, right? That people are like, oh, Bitcoin, something happened. Bitcoin went down $5,000. Well, Bitcoin's worth $100,000 now. That's really only 5%. I've seen Tesla have way worse days a bunch of times this year, right? But you mentioned something in one of your previous questions that I was really happy that you talked about, is that we're starting to see some more traditional assets that generally when the market, that react in accordance with how the market does, that are being paired with Bitcoin to kind of hedge against some of that volatility. And we're going to talk about that in just a second, so stay tuned because I got this story here I'm very excited to chat with you about. Because Grant Cardone is raising over $1.2 billion for a series of funds that invest in both commercial real estate and Bitcoin, because nothing screams diversification quite like strip malls and Satoshis. Now, after a January meeting with Michael Saylor, Cardone decided to jump headfirst into the Bitcoin treasury bandwagon, describing the current frenzy as a 21st century gold rush. But unlike Saylor, who thinks risk is just a social construct, Cardone's taking a more cautious route, and Saylor, well, he let him know about it. Now, when Cardone laid out his strategy, starting with 85% real estate and 15% Bitcoin, gradually moving to a 50-50 mix over 5 years, Saylor accused him of pussyfooting and suggested flipping the ratio to 80% Bitcoin instead. Cardone, he wasn't quite swayed. He reminded Saylor that he's a real estate guy, not a Bitcoin evangelist yet. And he said that going 80% BTC would make him no longer a real estate guy. Still, he's clearly on board the Bitcoin train, even if he's riding in the slow car. Now, since that meeting, Cardone has launched 4 Bitcoin real estate funds, with 8 more on the deck for this year alone. His latest fund is the 10X Miami River Bitcoin Fund, named after his best-selling book, The 10X Rule, because why waste a good brand when you can slap it on a real estate and crypto plan? Now, Cardone's strategy is to buy cash flow positive properties at a discount, then use the value spread to buy Bitcoin. That discount, combined with the rental income and tax deductions from depreciation, creates what he calls a flywheel that lets him accumulate more Bitcoin over time. He believes that traditional real estate investment trusts can return maybe 12% a year. But with Bitcoin in the mix, he says he's aiming for 30 to 40% annual returns. So while Saylor's sprinting to the orange future barefoot, Cardone's still lacing up his loafers, but he's headed in the same direction. So, Brandon, I thought this was super interesting. Cardone's calling Bitcoin treasury companies the new gold rush, but he's still easing in with 15 or 20% BTC and 80 to 85% real estate. Do you think that's a smart, diversified play, or is he underestimating Bitcoin's upside?
I believe the answer is both. Yeah, I think he's shortchanging himself, literally and figuratively. But in saying that, yeah, I mean, I don't know. So this is what I did at a lower level. I wasn't raising, billions in huge, real estate funds, but I was doing this at a lower level for a number of years, raising money, raising private money, and then buying small apartments, single family homes, and then fixing them up, renting them out, refinancing, giving the investors back their money, stuff like that. So I get what he's saying from all ends of the spectrum. And you don't, again, we talked about education and leading to adoption. The more you understand Bitcoin, the more you understand money, just what money is, which is what most people don't, right? Because we're not talking money in school. This is purposely designed that way, so you aren't questioning. You kind of they start you on second base or third base without ever asking the first root question of what is money and what are you working for. So in saying that, it makes sense to what he's doing, just because, again, he's raising massive pools of money. But I think to Saylor's point, he's like, hey, bud, like, look at me. I'm right next door to you. I'm in Miami. I'm raising all this money. I'm raising way more than you are. And look what we're doing. And I think Grant is just saying, hey, yeah, like, I'm a real estate guy. Look, like, give me some props. Like, I'm doing more than the most people are, and my education is getting there. I'm sure his brother Gary obviously has been in his ear. I know he has, and saw him in Vegas and talked to him about it specifically. But it's funny because, again, it just Grant or Robert Kiyosaki, one of my big mentors 15 years ago, it shows the maturation. And the thing I love too, I will say, is I trust people. I tend to trust people that they're able to change their mind and hold opposing opinions in their head at the same time. I think that is one of the classifications of genius to a large extent, is can you hold opposing opinions in your head, or more than one opinion, or different, maybe opposing opinions in your head, right? So that to me is a really big thing. Doing that, Robert Kiyosaki is doing that, learning, and they're going through this process that we've all gone through. I mean, I don't really know many people that have said, hey, immediately right when I saw it, maybe other than Andreas Antonopoulos, they read their white paper, but even Andreas, what didn't sleep for 6 months right when he found Bitcoin and kind of read the white paper and went down that road. So it just goes to show like that maturation process. But yeah, should he be allocating more to Bitcoin? Yeah, of course. But that's coming from people who really have understood it and put thousands of hours in. Grant's probably put a couple hundred in so far. So he'll get there, and it'll outpace that. I always look at real estate as it's the and I'll say this too, just personal anecdote. I got rid of a lot of my properties and went into Bitcoin the last handful of years, not just my organization, my team, but it was also because there's city risk, there's state risk, there's tenant risk. There's all these things when you're entering a society that's becoming more and more chaotic and it's deteriorating and the empire is really starting to crumble and cities are bankrupt, states are bankrupt, and they're bite scratching and clawing for anyone that might have money to tax them, to come at them. I mean, we have properties and all of a sudden there are literal holes in the ground. And then as soon as we fixed them all up and, put 2 or 3 times the money inside of those houses after what we bought them for, we're getting hit with fines. We're getting hit with like, hey, you need this, we need to do that. And I was like, that I could just literally give this back to you, just default on this. And then you could be stuck with this again and be a hole in the ground, but they don't care. And that's the game. That's the rigged system that we're in. And so Grant, yes, he's got really premium assets, higher class assets, really big assets. So he generally can rent them out more. But again, if you're in single family homes or maybe a small apartment complex, that's why it's so hard for the average person, because you're getting hit with stuff that's wiping out your cash flow. It's wiping things out. And real estate might be the best thing on the Titanic, might be the last to go in because it's got depreciation, it's got cash flow, it's all these sexy terms that kind of keep you in the asset and entice you to stay in fiat. But it's still going to be 12,000 feet below the sea floor in a couple hours. You're just the last to go in. So it looks like it's great. But in saying that, Grant, Robert, some of these guys, they have massive followings, and them getting into Bitcoin like this and educating. I just saw Kiyosaki like right before I came on with you guys, and he just dropped another video about Bitcoin and Saylor and going to 13 million. These are real estate guys, like literally decades and decades of their life between them, each of them talking about real estate and now starting to understand Bitcoin, what it truly is. And Bitcoin is money. Bitcoin is it's money, it's capital, it's currency, it's insurance against the system, but that's very hard for the average person to wrap their mind around. So it takes time, but I'm very excited to see these real estate guys because they're going to push a lot of real estate investors into this system, realizing, I don't have to try and refinance all these houses and acquire all these homes. And now that leaves more homes for the average person, the average home buyer, the first time home buyer who can't afford anything. Well, guess what? As those bigger investors start leaving and taking their monetary premium and putting it into Bitcoin, now housing starts coming back down to utility value, and the average person can now afford a home again. It's going to happen across all the asset classes as monetary premium leaves and goes to Bitcoin, which is the money, the first money humans have ever had. It now makes all these other asset classes over the next 5, 10, 15, 20 years more and more beneficial or more beneficial to own them for the average person, which is this step change in humanity we've never seen before.
That's a super interesting point that I never thought of. I mean, right now there's an absolute housing crisis in this country. Housing, I mean, like in California alone, I think the median housing price is over $1 million right now. So I think we would all certainly stand to benefit from those coming back down to earth a little bit. And getting back to Cardone, I had the pleasure of chatting with him a little bit at the Bitcoin conference. And he said something to me to the effect of, he thinks that pairing Bitcoin with these real estate investments, which again, traditionally real estate is considered one of the most sound investment vehicles you can get, right? But by pairing this traditional investment vehicle with Bitcoin, he thinks he will become the biggest, or one of the biggest, if not the biggest, drivers of Bitcoin adoption in the future. Kind of to your point, you'd see a lot of people maybe in real estate jumping ship a little and putting more of their money in Bitcoin. Do you think that's true? Do you think these types of plays will actually increase the adoption of Bitcoin globally a lot faster than we think?
I think so, because you're now opening up these, again, like we talked about Matt Hogan earlier in the interview that I had with him recently, all these liquidity pools, that's one of them. I mean, it's a lot of like the REITs or like these massive, you have a lot of derivatives, or a lot of the market is centered around these derivative products, a lot of them being mortgage products. That's obviously a large part of why things collapsed in 08. These, subprime loans, like so much of it is driven around real estate. And so but now you're going to have this asset inside of these real estate pools or derivatives, or whatever you want to call them. But you're going to have this now where the investor, when they have a quarterly call or a monthly call, whatever it is, they're getting updates. They're going to be like, what the hell? Like, why is this, and again, this doesn't happen overnight. It's not going to happen in the next month per se, but over the next 6 months, over the next, year, 4 years, 8 years, as people see this, they're going to be like looking at it like, what the hell's going on? Like, how are you driving this much? Is it someone in a limited partnership, like if you're giving your money into an accredited investor, private placement, which again is not there for the average person. So like the average person can't be in that. You generally have to have more of over $1 million net worth, et cetera, some other rules or things, regulations to that. But the average person can't be in there. So now all you need to do is own money. You just own Bitcoin and you can drive higher returns then, because a lot of those private placements are maybe 5%, 8%, 12%, 16% maybe IRR over the long term, just, long-term, rate that someone's getting back for all intents and purposes. So now you can beat that. You can beat hedge funds. You can beat all these placements. But now the average person that is, or not, I shouldn't say the average person, but the person that's in these private placements, as they're seeing this happen and getting these returns every month or their quarterly call, whatever it is, they're going to be like, what the heck is going on? How are you guys doing this? Like, this is 4x or that we usually get, or 6x or 8x. And they're going to see that and be like, why don't I just own Bitcoin? Why am I giving you my $1 million and, some wealthy person? I'm not giving you $1 million anymore, Grant. I'm going to go just buy Bitcoin. So we're at this weird inflection point right now in the next, handful of years where people are going to start seeing this, and it's really going to drive things forward. And on top of that, like, again, Grant, I know some of these guys, like, it's like what Saylor's doing or what Grant or some of these guys, and I know Robert Kiyosaki, like his real estate guy, Ken McElroy, they raise money and then they'll refinance and pull all the money out and they'll get an infinite return because no money's in the deal. So they have no money in the deal, but they own the assets still. That's going to happen with Bitcoin, but you're not going to be able to, as these guys are acquiring more Bitcoin really for no money out of their pocket, they're going to become louder about it as well. So you're going to have Grant talking about it even more. So he'll start shifting. This is where we talk about Bitcoin aligning all incentives. Everyone wins on a Bitcoin standard. These guys, because they're making even more with Bitcoin as well, not just the limited partner, someone, silently giving $1 million or $10 million, but the general partner running the fund is going to be like, heck am I doing? Wasting all my time. I've got 10 people that run this fund. They're managing the property, all these tenants. What am I doing this? Again, I could just buy Bitcoin. So these unseen incentives, hidden incentives across society just start rippling through over time. And those are the things that the average person, even us, like we can't see day to day. You don't see that. But over time, when you look back, it's obvious. And you're like, whoa, like, because again, I'm one of those people. I'm a great example. Sold a bunch of my real estate. I was a real estate guy. I studied it, did it for 10 years. And I've sold a lot of it to go into Bitcoin. Well, how many more people are like that? I've talked to a lot myself, and there are going to be more and more and more people selling those assets, selling their bonds, selling their real estate, selling their stocks to be in money because it preserves, Bitcoin, because it preserves your time and energy, and it beats all these other forms unless you are a Grant Cardone, unless you're the top 0.00001% of people who can raise all this money and raise $1 billion and then refinance it and have no money in the deal. That's very, very few people. And society is not built to withstand that. That's the average person should be able to go save more than they spend and get ahead. So we're going to return to that. It's going to take a few years, but these guys, everyone will realize it from the top all the way to the bottom as this adoption or the education grows.
Absolutely. And, we want to keep you here for one more second. We have another story we want to go over because Michael Saylor, Brandon, I don't know if you saw this, is predicting $21 million per Bitcoin now. We're going to talk about why in just a minute, but we're going to take a break and we'll be back right after this. All right, we're back with more Bull Run, and Michael Saylor, Bitcoin's loudest maximalist and the founder of Strategy, is back on his two-track schedule. Number one, he's pretending that the end of fiat as we know it is near, and two, quietly buying $1 billion in Bitcoin while he's doing it. So this week, Saylor gave a keynote at Bitcoin Prague 2025 where he declared with absolutely no trace of irony that Bitcoin will hit $21 million in the next 21 years. That's $21 million per coin for those of you in the back by 2046. Because if you're going to manifest a future, you might as well do it with a round number and zero humility. Now, according to Saylor, this target isn't pulled from thin air. It's based on what he called extraordinary developments in the past 11 months. Things like the White House embracing Bitcoin, Donald Trump winning the presidency and declaring the U.S. a Bitcoin superpower, and 3 major Bitcoin-related bills advancing through Congress. We're talking the Genius Act, the Digital Asset Market Clarity Act, and the Bitcoin Act. Now, Saylor says this level of adoption and alignment is something no one conceived over a year ago, and to be fair, That's probably mostly true. See, last year we were debating whether the SEC could define the word digital. Now we've got state-level Bitcoin reserves and federal Bitcoin legislation. So yeah, it's been a weird but productive year. Now Strategy, Saylor's company formerly known as MicroStrategy, continues to pile Bitcoin onto its balance sheet like it's playing Monopoly on cheat mode. They currently hold over 592,000 BTC worth over $60 billion. That's roughly 2.8% of all Bitcoin currently in existence, and based on Saylor's recent behavior, they're just getting started, baby. On June 22nd, Saylor tweeted a chart of Bitcoin's price with the caption, "Nothing stops this orange," which is either a meme or a coded signal that the SEC that another 8K is coming. Now, historically, every time Saylor tweets something like this, a massive Bitcoin buy is sure to follow, so the markets are definitely watching. But not everyone's buying the hype or the debt. Legendary short seller Jim Chanos, the guy who sniffed out Enron before it exploded, has publicly called out Strategy's financial structure, specifically the way the company uses convertible debt to finance its Bitcoin purchases. Saylor insists the debt is unsecured, convertible, and no recourse, meaning even if Bitcoin crashes 90%, they're totally in the clear. Chanos says, not quite. In his words, there is, of course, recourse to Strategy if the convertible debt has not converted to equity when due. But how does he not know this? Now, which is Wall Street code for this guy is out of his damn mind. Chanos is so convinced, so he's now shorted Strategy while staying long on Bitcoin, a position that screams, I believe in Bitcoin, but I'm betting the guy holding it gets margin called. So here's where we are. Michael Saylor is predicting $21 million of Bitcoin, subtweeting his next billion-dollar buy, and getting absolutely roasted by a guy who took down Enron, all while holding nearly 3% of the entire BTC supply. So say what you want about him, but when the history books are written, he'll either be a misunderstood genius or the guy who accidentally turned a software company into a meme-backed hedge fund. All right, so we're bringing back Brandon. Brandon, Saylor says Bitcoin's going to 21 million bucks in 21 years. Is this a wild prediction or a calculated bet backed by momentum that we're all underestimating?
Yeah, it's I'm not gonna lie, it was funny at first when I heard about it. 21. But in saying that, Bitcoin is a meme. Right? Money is a meme. Money is it's a human psychology. And that's what, I mean, inflation is human psychology, right? If people believe something to be true, perception is reality. Whatever people believe to be true is, I mean, life is a collection of stories we all tell ourselves. Every single day, every single human being gets up, they tell themselves a story, I can or I can't, I'm going to or I'm not going to. And that's how life plays out, period, end of story. And that's where Bitcoiners, again, tend to be idealistic. I was liking, I have a book I'm working on, actually. It's not going to be long. It's probably 100 pages to be out by the end of the year. And it's about the American Revolution and Bitcoin. And I'm pretty hell-bent on the 3%. We only need 3% of people to really understand Bitcoin, to become Bitcoiners truly and push for adoption, because the American Revolution was only a couple percent of people that really fought and said, hey, I grab my musket and I'm out the door. Like, I'm not taking this anymore. Because most people, that's what people don't realize. Most people were apathetic. They were indifferent. They didn't care. They were lazy. They were, and I shouldn't, if you're over in America at that time, you're probably not a lazy person, but they were apathetic to the king, or they might have been scared or whatever it was. And they were like, you know what? I'm good. Whatever, guys. And there were a couple percent of people that said, I'm going out the door. I'm grabbing my musket. I'm not taking this anymore. But at the end of the day, those couple percent of people, and it grew a bit over time as the tide turned, but those couple people, or those couple percent that believed they could turn the whole tide, turn the course of human history and the world, and then they brought the Bill of Rights, the Constitution, to the other 97%. And I really believe that that's kind of where we're at with this. We got a couple percent of people, the weaponized autists, as everyone always talks about, that are going to drag the rest of the human population across the finish line. We're not going to have 50% of the people believing what we believe. So the reason I say all this is that it's not like, oh, there's a billion people coming to our aid, and we have to understand that there's going to be some more. The cavalry is coming to a degree. We have a few more reinforcements coming, and it's our job to find those people. But that's it. We're going to have to pull people begging and pleading across the finish line, and because most people are not built that way. And that's life. And we have history to show us over and over again that that's the case. And in saying that, the Saylor thing is important. We talked about it a little bit earlier. Max Kaiser's, and what he was doing. I know you mentioned that. It's moving to Overton window. You have to move to Overton window because it all is a meme. So Saylor's meme is easy in the sense of, again, the average person can understand it. We all know Saylor's great at stories, good at memes. Bitcoiners are very good at memes. And so that's where it's very important for people to have things to easily latch onto. It's one of the reasons that Donald Trump is so successful. He speaks at a fourth grade reading level, and people can laugh all they want at that. It's one of the reasons that I do my channel the way I do it. If you want something, the interviews that we do, I'll go for an hour or two with people, and we'll talk about a lot of fundamentals. We'll talk about a lot of things that seem benign, but I look at my job as to try to bridge the gap to the couple percent of the rest of the world who doesn't understand Bitcoin, doesn't understand what we know. And the couple percent, or maybe 1% that are very advanced and they get it. Well, guess what? We can go find someone else's channel to go watch that they really want to go down the rabbit hole, become a subject matter expert into this thing on the blockchain or this part of Bitcoin or whatever it is. So how do we reach that other couple percent of people and bring them over to our side? Again, it's Overton window, and the price, like it, love it, hate it, whatever it is, that's the number one recruiting tool that Bitcoin has. It's the people, because we can wax poetic about, it saves people from war, or it's people are walking with their wealth in their head, like we talked about earlier, to another country. But that's not the use case for most people. Most human beings want to be wealthier. Most human beings are looking for a way to preserve their time and energy, go to work, and not be stolen from through their fiat currencies. That touches all 8 billion people. So we have to continue riding that. And at the end of the day, too, what you guys are doing here, what I do with our podcast, we're trying to ride the line between capturing someone's imagination and psychology and hooking them in to come and then watch us. Because at the end of the day, they're seeing Kim Kardashian on TV. They're seeing fantasy sports betting, and they're seeing all this other stuff. You have to pull them away from that somehow. And even a Bitcoiner, someone who's hodling, you need your conviction re-strengthened over and over again. You have to say, you know what, I am going the right direction. We all need that. If you put 1,000 hours in, 5,000, 10,000 hours in studying Bitcoin, studying money, guess what? You've had your moments of weakness where you're like, you know what, I'm going, the wrong direction maybe, or maybe you have a moment of slippage, and then you go watch something, you're like, you know what? Yep, I've been right for the last 5 years. I've been right for the last 5 months, or whatever it is. So it's our job to be doing that. And Saylor, what he's doing is incredibly important. It gets dismissed at times. It gets laughed at, whatever it might be. But it's the memes. That's the power of what Bitcoin is. And that the memes are the truth. And that's how we're going to continually get people educated as to what's happening and making it palatable, fourth grade reading level for the average person, because that's the average reading level of really people in America. Let's call it what it is. So we have to understand, we have to speak to people at that level, or else we'll just keep batting, smashing our head into the wall and thinking we're going to get something different.
Yeah, and I got to say, I love your analogy between the American Revolution and what we're experiencing now, right, in this kind of monetary revolution, because both are kind of come from the same impetus, right? It's like people trying to build a better lives for themselves and their family's future. And these are just like different arenas they're doing it in, but there are some really stark parallels there. And I tell you, when you release that book, let us know. You're coming back on. I want to hear you talk about that. That is such an interesting analogy. So please make sure you're letting us know when that's done, because I hadn't heard that before, but I friggin' love it. So, Brandon, we got to let you go here in a sec, but before we do, you are providing such amazing education and intel into the Bitcoin space for the masses out there. I'm sure there's plenty of people from our audience that are like, hey, we want more Brandon. Where can we find him? Where can I send him?
So it's just Brandon _Gentile, BRANDON _Gentile, GENTILE on YouTube and on Twitter. Rumble, I believe, as well. So you can go to all those places. The Playable Character Show is the name of the podcast, of the actual show itself, and that's what I see my job as. It's to bring people over to our side, that 3%. Find the people, and Mark Moss always says it too, right? I mean, find the lions. We're not trying to find the sheep. It is what it is, and we have to call like we see them. But we're trying to find people that have the call inside them, have that inside of them to say, hey, we are going a different direction, like you just noted. We're going a different direction, figuratively picking up our musket and saying, hey, it's the same kind of ethos, but it's a very different way. Bitcoin is the peaceful revolution. So how are we fighting this information battle we're in, and how are we going to find those people? And that's what I see my job as, is to give people, not try to go super deep into things, but if we do, how do we bring it back to that fourth grade reading level? So it's a lot of fun. We have incredible guests on the show. And we have a lot more coming here in the coming weeks and coming months. So yeah, Brandon_Gentile is where you can find me on Twitter. I believe Noster as well, but all the different channels basically is Brandon_Gentile. And I look forward to talking to everyone, seeing the comments, and they're all really fun. So just appreciate you guys having me here. It's an absolute blast.
Hey, it was our pleasure, Brandon. We appreciate you giving one of the best orange pills in the business. Everybody make sure to check out Brandon on his page. And Brandon, hopefully we'll see you again really soon, buddy. We appreciate your time today, and enjoy the rest of your week, my friend.
Hank, thanks so much, and appreciate all you guys. Keep doing it.
All right, guys, welcome back to Bullish, Bearish, or BS. Today, it's an easy one. It is a strictly bullish day. We got guys like our first guest, Julian Farwer, educating us on all the new Bitcoin laws that are going across the country. Make sure to check him out on bitcoinlaws.io for all of the most up-to-date info on what's happening in the states around you. And of course, we have education has never been better and more accessible with our friend like Brandon Gentile on his page. So make sure to check him out. We're feeling bullish, and so should you. This concludes another episode of the Blockchain Report. Make sure you like, follow, and subscribe over at RoxomTV and Hank at RoxomTV on all platforms in the world. And we'll be back Tuesday with more crypto chaos for your viewing and listening pleasure. Thanks for tuning in. We'll see you mañana.